Welcome back to your monthly real estate market update with Pries Capital Real Estate. I'm Jason Pries, founder of Pries Capital Investment Research. As always, we're here to cut through the noise, break down the numbers, and give you a clear, data-driven look at what's really happening in the Myrtle Beach housing market. As summer heats up and July 4th celebrations wind down, it's time to take a closer look at the broader forces shaping today's real estate landscape. This month, I'll walk you through the latest readings on consumer confidence, sentiment, and the Fed's preferred inflation gauge. We'll also break down the recent trends in mortgage rates and unpack a full spectrum of housing market data, from existing and new home sales to the latest pending sales activity. We'll also examine how the Real Estate Market Action Index stacks up against the most recent weekly insights from Pries Capital Investment Research. To wrap things up, I'll share the latest data on housing affordability and what it means for buyers and sellers heading into the second half of 2025. Starting with inflation, the Fed's preferred measure rose 2.3% year-over-year, while the core index, which excludes food and energy, ticked up slightly. Meanwhile, consumer confidence dipped in June, and although sentiment saw a minor improvement, both metrics remain historically soft. This sour consumer outlook, paired with the Fed's ongoing wait-and-see stance, helped nudge interest rates lower, including mortgage rates. While the drop is certainly housing-friendly, it's a modest move and likely won't drive major changes in buyer behavior just yet. Buyers take note. Options continue to improve. In the first week of July, active listings in the Myrtle Beach housing market rose 32.2% compared to the same time last year. This builds on May's already strong 39.9% increase and marks the 20th straight month of year-over-year inventory growth, a clear sign the market is normalizing. For the third consecutive month, available inventory held above 1,048 homes, pushing us closer to a key recovery milestone, surpassing 2020 levels, which marked the beginning of the pandemic housing shock. While we're not all the way back yet, we're closing the gap. June inventory is now just 17.6% below 2019's more typical levels. That tells us the supply side of the market is accelerating, giving buyers more selection and putting some healthy pressure on sellers to price competitively. New listings in Myrtle Beach came in at just 70 this week, a 2.3% drop compared to the same time last year. While earlier this spring we were tracking well ahead of 2023 and 2024 levels, that momentum has recently cooled. In fact, new listings have declined for 4 straight weeks, signaling a clear slowdown in seller activity. Traditionally, new listings tend to ramp up through June, peaking mid-season. But this year, the spring home buying season has been noticeably more subdued. We saw our peak in May, a bit earlier than usual, and since then seller participation has steadily declined. This retreat is part of a broader trend. While we've made progress from the ultra-low listing activity of recent years, we're still well below the pre-pandemic norms. Many potential sellers remain hesitant, likely due to economic uncertainty, elevated mortgage rates, or simply the lack of urgency to make a move in a slower market. With inventory continuing to climb and homes staying on the market longer, the Myrtle Beach housing market is clearly shifting in a more buyer-friendly direction. While this cooling trend may feel jarring for sellers, it's important to remember the context. We're coming off an extended period of intense seller advantage, marked by record low inventory and lightning-fast sales from 2020 through spring of 2022. Now, as the market gradually rebalances, many sellers find themselves navigating unfamiliar waters, especially those who bought their homes during the peak. Pricing power is no longer automatic. Yet, even with softer demand and slower moving inventory, sellers are still anchored to top-dollar expectations. We've now seen 4 straight weeks of flat median pending prices, with this week's number holding at $439,900, identical to this time last year. So far in 2025, we've logged more price reductions than in any year we've tracked at Pries Capital, but widespread price drops still aren't the story. Most sellers are holding firm, and the market is defined more by selective discounts than broad-based depreciation. In short, the market feels cooler, but prices are stable, at least for now. While median asking prices have held steady, a growing share of sellers are making price cuts, a telling sign of shifting market dynamics. In the first week of July, 53% of all active listings in the Myrtle Beach market had reduced their asking price. That's a full 10 percentage points higher than the same time last year, and it marks the highest July price cut rate in our Pries Capital data going back to at least 2016. This trend of increasing price reductions has now continued for 6 straight months. Sellers are clearly adjusting their expectations as buyer demand remains subdued, constrained by affordability challenges and intensified by rising competition from a growing inventory of homes on the market. What's different about today's market is that many sellers are finding themselves in a position they haven't experienced in years. Unlike the red-hot market of 2020 to 2022, sellers can no longer expect multiple offers over asking in the first weekend. Instead, they're facing a more measured, buyer-driven environment. However, it's important to note, this isn't 2008. Today's homeowners are sitting on record levels of equity. That means instead of panicking or slashing prices aggressively, many would-be sellers are simply opting to withdraw their listings if they can't get the number they want. This behavior is why we're seeing selective price cuts, but not a full-blown collapse in pricing. Bottom line, expect more homes with price reductions, not necessarily lower home values across the board, at least not yet. And what we're seeing now is a unique dynamic. While home sales may be softening due to affordability headwinds and rising inventory, pricing isn't collapsing, in part because many sellers would rather delist and wait than negotiate too far down. That wait-and-see approach is tempering transaction volume while subtly supporting home prices, even in a shifting market. Thanks for watching this month's real estate market update. If you're navigating this ever-changing landscape and want to make smart, confident decisions, we're here to help. Visit us at Pries Capital Real Estate right here in Myrtle Beach, South Carolina, or reach out directly for a personalized consultation. At Pries Capital, we cut through the noise to deliver what truly matters: real data, real insight, and real guidance you can trust. Want to stay one step ahead of the market? Sign up for your free Pries Capital Real Estate Research account at priescapitalrealestate.com. You'll get weekly, hyperlocal market data with professional insights tailored to your specific neighborhood. Thanks again for tuning in, and we'll see you next time.